Algeria, rich in energy resources, now faces a sharp economic slowdown. GDP growth is projected at just 2.6% for 2025, down from 4.1% in 2023, a clear sign of mounting challenges. The root cause? A long-standing dependence on hydrocarbons, which has left the economy vulnerable to global price swings and stifled innovation. For decades, oil and gas have funded the state and social programs, but this reliance has created fragility, limited job creation, and discouraged diversification. Now millions, especially the youth, struggle with limited opportunities and rising uncertainty. The government recognizes the need for reform, but progress has been slow, hampered by bureaucracy and a lack of private sector dynamism. As we explore Algeria's economic downturn, we'll connect the dots between policy decisions and their real-world impact. This is more than numbers. It's about the aspirations of a young nation seeking stability and prosperity beyond oil. Understanding these dynamics is crucial for both Algerians and international observers. The stakes are high. Algeria stands at a crossroads, and the path it chooses will shape its future. Algeria's slowdown is driven by 5 interconnected challenges. First, overwhelming hydrocarbon dependency. Oil and gas make up 93% of exports and 60% of the state budget, tying the economy to volatile global prices. Second, high unemployment, 12.8% overall, but nearly 30% for youth and over 21% for women, reflecting deep structural barriers. Third, rising public debt, now at 62.5% of GDP, limits the government's ability to invest in infrastructure and diversification. Fourth, inflation at 7.7% erodes purchasing power, while the central bank's 4.5% interest rate makes borrowing costly, further slowing growth. These factors create a cycle of boom and bust, stifling innovation and job creation. The result, a fragile economy, vulnerable to shocks and unable to provide enough opportunities for its people. Breaking this cycle requires urgent coordinated reforms. Algeria's GDP growth has dropped from 4.1% in 2023 to a projected 2.6% in 2025, a nearly 40% decline. This slowdown means fewer jobs, less business activity, and stagnating prosperity. Youth unemployment at 29.8% and female unemployment at 21.4% highlight the human cost of these economic troubles. Inflation at 7.7% is outpacing wage growth, squeezing families and eroding living standards. The central bank's 4.5% interest rate, meant to fight inflation, also makes credit expensive, discouraging investment. Public debt has climbed to 62.5% of GDP as the government borrows to cover deficits and maintain social programs. This debt burden is becoming unsustainable, diverting funds from productive investments. The numbers reveal a system under strain, with mounting risks for the future. Algeria's economic challenges are not just statistical, they're shaping daily life for millions. Meet Fatima, a young software engineer in Algiers. Her tech startup's growth stalled as clients cut spending and high interest rates made loans unaffordable. Ahmed, a construction contractor in Oran, thrived when oil revenues were strong. But as public debt rose and government projects dried up, he had to lay off half his staff. The Ben Ali family in Constantine runs a grocery store. Inflation has driven up their costs, forcing them to raise prices and risk losing customers whose own incomes are shrinking. These stories show how macroeconomic pressures, unemployment, debt, inflation, translate into real hardships for entrepreneurs, workers, and families. Fatima's struggle reflects the barriers facing youth and women in business. Ahmed's experience highlights the ripple effects of hydrocarbon dependency. The Ben Ali's daily challenges reveal the impact of inflation on ordinary Algerians. These are not isolated cases, they're emblematic of a nation in economic distress. The need for reform is urgent and personal. Algeria's economic problems are deeply interconnected, forming a self-reinforcing cycle. Hydrocarbon dependency funds the state and social programs, but when oil prices fall, deficits and debt rise. To avoid unrest, the government borrows instead of reforming, pushing debt to 62.5% of GDP and limiting investment in diversification. This lack of diversification keeps unemployment high, especially among youth, fueling frustration and social tension. The state's response, expanding public sector jobs, only deepens reliance on oil revenues. Inflation, driven by import costs and inefficiencies, forces the central bank to keep interest rates high, which discourages private investment. Expensive credit means fewer businesses expand or hire, worsening unemployment and slowing growth. Every policy lever is constrained by this cycle, making meaningful change difficult. Breaking free requires coordinated action on multiple fronts. Without reform, the cycle of dependency and stagnation will persist. Without reform, Algeria risks prolonged stagnation and potential social unrest. The current model, reliant on oil revenues and subsidies, is unsustainable as debt rises and opportunities dwindle. High youth and female unemployment threaten social stability and waste the nation's potential. The solution: bold structural reforms, starting with economic diversification into sectors like manufacturing, agriculture, tech, and tourism. The government must cut red tape, strengthen the rule of law, and create a level playing field for private investment. Education and labor market reforms are essential to equip youth with relevant skills and encourage female participation. Subsidies should be targeted and efficient, and public debt must be managed with a credible plan. Prudent fiscal and monetary policies will help restore confidence and support growth. These changes require political will, but they are vital for Algeria's future. Algeria's 2025 slowdown is a wake-up call. The data, sluggish growth, high unemployment, rising debt, signals a structural crisis rooted in decades of hydrocarbon dependency. The cycle of debt, inflation, and slow reform threatens long-term stability and prosperity. Stories from Algiers, Oran, and Constantine show the real impact on everyday lives. The path forward is clear. Algeria must commit to a bold, coordinated reform agenda, shifting from a state-dominated, oil-funded model to a diversified, private sector-led economy. This means creating a business-friendly environment, empowering youth and women, and managing debt and inflation wisely. Success depends on building a new social contract based on opportunity, not subsidies. The risks are real, but so is Algeria's untapped potential. The choices made now will shape the nation's future and influence the region. Algeria's journey offers lessons for other resource-rich countries at a crossroads. The world is watching. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart. Trade.